Hi, this is Brian Lynchy with your weekly market update. ADP reported that the private sector shed 32,000 jobs in November, which was well below expectations for a modest gain. Over the past 4 months, the private sector has now lost a net 17,000 jobs. ADP chief economist Dr. Nella Richardson called the trend choppy, pointing to cautious consumers, an uncertain economy, and a broad slowdown led by small businesses. Other indicators are telling a similar story. Continuing unemployment claims remain elevated, job cut announcements are on the rise, and hiring plans are at their lowest levels in years. Taken together, it's clear the job market is continuing to cool. On the inflation front, the government released the delayed personal consumption expenditures report for September, which came mostly in line with forecasts. Core PCE, the Fed's preferred measure, which strips out food and energy, edged down slightly from 2.9% to 2.8% year over year, a touch better than expected. The Fed is trying to balance a slowing economy with inflation that's still running above its 2% target. Weakening data can make rate cuts more likely, but stubborn inflation can delay them. And even though the odds of a rate cut at the Fed's December 10th meeting have gone up, officials remain split. Chair Jerome Powell has stressed that there's no risk-free path forward. Just as a quick refresher, when the Fed adjusts interest rates, it changes the federal funds rate. The short-term rate banks charge each other. This doesn't directly set mortgage rates, but it strongly influences them along with broader economic conditions. If you're thinking about buying, refinancing, or reviewing your options, I'm here to help guide you through the process. Reach out anytime.